we are again, examining some of last week's unusual options activity. The last few trading sessions have been very volatile, with SPY coming within just $1 of its all-time high on Thursday before ending the week down 2%. Before we take a look at some of this week's unusual options activity, I'd like to quickly plug the Flow Info tab, which has a lot of great information pertaining to the feed, some of which will directly apply to the trades we are about to discuss. And now, let's get right to it. Adobe, which reported earnings on Thursday in the pre-market, saw some unusual put activity, which started Monday and continued for the remainder of the week. Shortly after the start of the Monday trading session, a large quantity of 620 and 630 strike puts dated for March hit the tape. The 620 put for March came up on a commonly used opening trade filter, which you'll find linked in the description below. Here's a look at the Adobe chart for this past week, with the arrow indicating when the put activity was initially detected. General market weakness and a downgrade from JP Morgan sent shares tumbling Tuesday, and on Thursday, Adobe reported earnings, meeting the street's revenue expectations but lowering guidance for the fiscal year 2022. Since the unusual put activity on Monday, shares of Adobe have fallen 17%, from $670 a share to around $555. The 620 puts, purchased for around $2,600, closed on Friday at $8,000 apiece, representing a greater than 200% gain. You can't Photoshop that. Next, let's talk about South Korean e-commerce giant Coupang. On Monday, a single trader hit the Buy It Now button for 10,000 of the 27.5 strike weeklies for $40 a pop. This trade would have also been caught by the opening trades filter. The very next day, they rolled up their calls to the 28 strike. They closed their 10,000 contract position on the 27.5 strike and used the profits from their initial trade to increase their exposure to 12,500 contracts on the 28 strike. Note, the trader received a very favorable fill when closing their 27.5 strike calls, which is why they show up in the feed as a buy. On Friday, the trader performed yet another roll, selling their 0 DTE 28 strike calls and purchasing the 29 strike calls for the following week. It also looks like they trimmed their exposure from 12,500 contracts to 10,000. Taking profits while still enjoying the potential for further upside to the underlying. Here, we see Friday's bid-ask activity for the 29 strike calls expiring December 23rd. You can see a heavy skew in both total premium and ask-side activity. The 29 strike calls saw another 14,000 volume after we saw the big roll take place. The contracts closed on Friday at $90 apiece, representing an intraday 50% gain from the time of the roll. And last but not least, we have OpenDoor Technologies. Take a look at Friday afternoon's ask-side call flow for ticker OPEN. At 2 p.m., we had a whale sighting, with nearly 10,000 of the 15 strike calls for January 14th purchased at the ask. This was followed by a hit on the 15 strike calls for December 31st, followed by even more call flow on the 16 strike calls for January 21st. The totality of Friday's OpenDoor options flow was heavily bullish, with bulls targeting January expiration calls slightly out of the money on the 15 strike. The markets will be closed this Friday in observance of the Christmas holiday. Volume will likely be low all week, so tread carefully and happy hunting.